Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today we're diving into the quarterly report for Traeger, the grill company. Let's see if their results are as smoky as their wood-fired flavors, or if something's burning. This report is basically a checkup on how Traeger did in the first 3 months of 2025. Did sales sizzle or did they fizzle out? Were they making money or just making smoke? Let's decode it together. This is Traeger's report for the quarter that ended in March 2025. It's like a snapshot of the company's health at that moment. Traeger had over 135 million shares of stock floating around in April. That's a lot of little pieces of the company owned by investors. Alright, let's peek at what's on the menu for today. As always, we've got the main course, the financial statements. This includes the balance sheets, income statements, cash flow statements, and those all-important notes where they explain some of the tricky stuff. Then there's the management's discussion, which is where Traeger tells its own story about the quarter. We'll try to see if that story matches up with the numbers. Before we get to the numbers, there's always some legal stuff. These forward-looking statements are basically Traeger saying, hey, we're making predictions about the future, but things could change. It's a way to protect themselves if their expectations don't quite match reality. Now let's look at the hard data, starting with the balance sheets. This is like a picture of what Traeger owns and owes at a specific time. One thing that jumps out is their accounts receivable. This is the money owed to Traeger. It went up from about 85 million to almost 95 million from the end of the last year to March of this year. So more people owe them money. But another interesting thing, their inventory went up a bit from 107 million to 127 million, showing that they're making more goods. Now, on the other side, the amount they owe on their line of credit, which is basically a credit card for companies, went up a lot from 5 million to 25 million. They are using more credit. Let's move on to the income statement. This tells us how much money Traeger made and spent over the last 3 months. Their revenue was 143 million, a tiny bit lower than the 144 million from last year. The company had almost the same revenue as before. It also cost them 83 million to make that money, a tiny bit more than 82 million than it cost them last year. It seems like they are staying afloat in the same waters as before. After all the comings and goings, Traeger had a net loss of less than 1 million, compared to a 4.6 million loss last year. It seems like they reduced their losers by a good bit. Their loss per share was a penny better than the 4 cents from last year. Next, we've got the cash flow statement. This tracks the actual movement of cash in and out of Traeger. Here, Traeger used 20 million in operating activities compared to the 12.5 million from last year. They seem to be spending more in operation than they are making. They also used almost 2 million in investing activities compared to the 5.7 million from last year. On the other hand, they got almost 20 million from financing activities compared to 12 million from last year. They must be borrowing a lot. Okay, now for the fine print, the notes to the financial statements. This is where Traeger gives more details about how they arrived at those numbers. Traeger relies a lot on a few big customers. 3 customers accounted for a pretty big slice of their sales. It's always a risk when you depend too much on a small number of buyers. Let's check how much money each type of product makes them. Grill, 86 million. Consumables, 30 million. Accessories, 26 million. The USA makes them 133 million. Rest of the world, about 10 million. The company almost exclusively makes their money in the USA. The company also has a ton of operating leases, about 25 million. They use derivatives like interest rate swaps and foreign currency contracts to hedge their risk. Traeger has a lot of debt, over 400 million, that's a heavy load. It seems like they settled a legal issue with their insurance for 15 million. Traeger has only one business segment, which makes our job a lot easier. Everything we've looked at applies to the company as a whole. Here comes the management discussion time, so we can contrast it with reality at. They say that bad financial condition and results were affected by a number of factors, but there are still significant opportunities, but also some risks. Traeger acknowledges a lot of uncertainty, including from things like tariffs and high interest rates. It seems like everything that's going on with the world is making them feel a little scared. They specifically mention tariffs. If tariffs go up, they might have to raise prices, and that could hurt sales. So what's the overall story? Traeger's revenue was pretty much flat, but they managed to cut their losses. They're still burning through cash though and relying on debt to keep things going. Now let's step back and look at the big picture. Traeger faces a tough balancing act. They're trying to grow, but they have a lot of debt hanging over their heads. Those tariffs are a real threat too, because Traeger makes most of their product in China, and they are an American company, so it might affect their sales volume. But on the bright side, they're managing costs a bit better, and they have a strong brand. Overall, I'd say Traeger is at a crossroads. They need to prove they can turn that brand loyalty into real sustainable profits, or all that smoke could end up blinding them. That's it for this episode of Corporate Decoder. Did you find it insightful? Let me know in the comments. If you enjoyed this video, make sure you hit that like button, subscribe for more corporate deep dives, and share it with your friends. Until next time, keep those questions coming.